Investors seem to be taking this as exactly what I said in the intro here, that China is much worse than people thought.
I'm surprised by it. I was talking with Paul before the show started. You think back 3 years ago, if we mentioned the word reflation, you bought every paper asset around. And that's exactly what the Chinese are doing right now. They are going out, they are reflating. This is a game of, you could say we're monetizing debt, but this is about deflation. It's a game of hot potato, passing it around. And I think finally the Chinese are getting aggressive, and they're going to try and export their deflation away from the mainland. I think overall, I don't think it's such necessarily a bad thing as the market is suggesting today.
The problem, Paul, is that from investors that I speak with, they're looking for more than just this move, that this doesn't go nearly far enough. It needs to be accompanied by some sort of fiscal stimulus. The PBOC needs to cut interest rates. They needed to cut the reserve requirement as well, and do it as some sort of package thing to alleviate any concerns that the market was have. Chinese market did nothing overnight, and we're selling off and selling off hard, directly related to China.
Look, I think you were never going to get a big bang, Scott, but we were sitting here on Friday and nobody was even talking about China except ourselves, saying they needed to do something. They just moved their currency the most in 20 years. If that's not symbolic, if that's not action, I don't know what is. And the thing is, they'll keep moving. Fiscals, whatever they want to do, monetary policy, they will keep moving until they arrest the fact that their economy is in trouble. They want 7% growth, and what they told you last night is you're going to get it.
Terry Duffy, it's great to have you,
Thank you,
back
Scott.
with us. Of course, Terry's the executive chairman of the CME Group. Commodities are a big part of your wheelhouse on a daily basis. What do you make of the carnage we've seen? Oil's getting absolutely ripped today. Copper's getting destroyed.
Well, on the oil market, Scott, I've been saying for a long time, when oil was sitting around $92 a barrel, and the input cost for U.S. explorers was roughly $80 a barrel, and there was one thing that was going to happen. The people that had the most of it and the most to lose were the Saudis and the other parts of the cartel over there in the Middle East. And they were going to take that price and run it down. And that's exactly what they've done. And I said that before, and I continue to believe that's going to continue to happen. And you see what they're doing even more today. They're putting more oil on the market. There's nowhere even to put this stuff. So the price is going to continue to probably decline some. We're looking at lifting the ban on the U.S. Export of oil. I testified on this in Congress just 2 weeks ago, and I think there's bipartisan support to do that. It doesn't mean you give all your oil away, but at the same time, it's like our grains. We don't give all our grains away, but we export them. There is a gentleman by the name of Mr. Ham that believes that you could add 1% to the GDP of the U.S. just by lifting the 40-year ban on the export of U.S. oil. That's a staggering effect. So we need to go down this path. We need to investigate it. But these products are going to continue, in my opinion, to stand under pressure.
Pete, what the markets giveth, the markets taketh away. Yesterday, we saw some of the most beaten up assets in this marketplace, whether it's industrials or materials, energy, which we're speaking about now, all across the board.
Right.
Same
names are actually the ones that are going down. I mean, if you look, and we talked about the legs of this rally to the upside have been the financials and the healthcare names. Those continue to hold up pretty well, Scott. They're still both above their 50-day moving averages. When you look at the XLV, you look at the XLF, they're holding up. But yes, you're exactly right. The OIH, the XLE, when you go look at the energies, the materials, all of those yesterday were higher. Now they're getting smacked down for all the right reasons, by the way. I don't know that yesterday necessarily was the right reasons for all of those to go up the way they did. Felt like it was some sort of a relief. Let's buy some of these absolutely brought out to the woodshed stocks. And now today they're getting back right there where they're selling them.